In this last edition of It's the Economy for the Year, we speak naturally to the industry who best represents the New Year celebrations. Indian Hotels boss, Puneet Chhatwal is our guest. Good morning, Mr. Chhatwal. Thank you very much indeed for joining us. Well, first tell us how is the entire group shaping up for the New Year celebrations? Are you booked, overbooked, 110% waiting list?
Good morning, Lata. I think the sector is back.
Yes.
The sector is back with the bank. And within the sector, we being the largest on the Indian subcontinent, we're obviously very well positioned to take advantage of that. And we are very well booked. We are not booked 110%, but because it would not be nice to walk away our guests when they come with a plan to celebrate in our hotels. So I think they're very carefully booked in most of the resort destinations, most of the palace destinations, most of the safari destinations. So we are quite pleased with the current business on the books.
Okay. Well, actually, you've got more than just New Year to fill the books. This unexpected G20 bonanza must be very big for you. So can you throw in some numbers? How has the Q3 been in terms of occupancies vis-a-vis your normal trends?
Very good, Lata. The sector continues to perform at 20% above the 1920 level. At least we within Indian Hotels don't compare with the last year or the year before that, because that was like a one-time event. We go back to 1920. And within that, what we have reported in Q1 and Q2 is higher than 20% growth. And this is actually the revenues, or the top line has seen a further acceleration in Q3, both for the sector as well as for our group, with just 2 days left in this year. And I think all in all, very positive wedding season, very positive MICE impact. And what you rightly said, I think the best is yet to come with the G20, and at some point, the inbound travel from outside of India will get back to the pre-COVID level, and the World Cup also happening next year. So I think there is some one-off incidents which should further boost the sector.
Okay, I get that number, 20% more than 1920 levels, and more than 20% higher for Q3 itself. But if you could give some percentage in terms of occupancy, and more importantly, what you just said, you know, the quarter to come, because you already know how much G20 will take away from you, and how much sports will take away from you, and how much pre-booking for holidays will take away from you.
So what we have seen year to date, if we looked at the financial year, we are looking at occupancies exceeding 70% across India. And in many markets like Goa, we are performing almost at 89-90%. So that is, it depends which market we talk about. Mumbai has done very well this year. It started with the IPL in the month of April and May. So that was like, those are a bit weaker months, the Q1 and Q2. And if you start off well, thanks to IPL, then you have a good year. Even Chennai has picked up, Bengaluru is picking up. So, and resort destinations have done well. On the G20, we have done 3 events. We started with Havelock, which is Andamans, and then followed by the Lake Palace and Fateh Prakash in Udaipur. And the third one was in Mumbai at the Taj Mahal Palace. Very positive. Very important for the sector. All these images going around the world, or will go around the world over the next 12 months, will help position India as a very interesting tourism destination. And that's something the sector has been looking for, following the Incredible India campaign, which happened, like 15 years ago. So I think it's all in all good news indirectly for the sector. And we are very pleased that it's coming our way.
Okay, actually 2 sectors I wanted to ask you in specific. Business travel, has it resumed? I mean, we used to have so many conferences earlier, and then they all went remote. Has business bookings returned in full swing? And secondly, the foreign tourist.
So let me start with the second one, which is easier. The foreign tourist is not yet back to the pre-COVID level. It is getting closer. The gap is narrowing, especially in the last 2 months. But we still have some way to go, and we believe in the first quarter of next year, based on various tourism agencies that have given some data. We should get there. Also, this is based on the air travel, which is expected to hit the pre-COVID level, not on the domestic, but on the international front.
Okay.
So that's the easier one to answer. On the business and leisure, there is a permanent change, Lata. What we count in leisure, which is showing a disproportionate increase, also includes business travel, because the terms that were coined, like bleisure, which is a combination of business and leisure, is actually happening.
Okay.
People taking an extended weekend, doing 1 or 2 days business and then adding a weekend to it, or people driving themselves to a destination more than they did pre-COVID, is more evident today than it was 3, 4, 5 years ago.
Oh, that's good to hear. So how much has all this helped to boost the room rates? How would room rates compare to pre-COVID levels and to last year?
So double impact room rates are also showing more than a double-digit increase, depending on which brand we speak about. So a Taj, for example, within our portfolio is commanding a much higher increase in rates than the other brands. The other brands are also at a high double-digit increase, whether it's 12, 15, 17, or 20%. Leisure destinations are leading charge because, as I said,
all this is YOY?
All this is based on 1920. If we did YOY, then the rate increase would be like 70, 80%.
Okay, got it.
So, so not YOY, but I think it is, we have taken as a view as a company, will only compare to 1920. Okay. Because that is what was a normal year, and the 2 years in between are not really a good benchmark.
Okay. And you know, I think it was last time on December 6th when we spoke, you said that your rate is to do 1.5 new hotels a month and that you're doing ahead of that. Can you update us how many new hotel managements you've got? And are those management fees also increasing? Are you able to charge better?
Well, I think the management fees is pretty much standardized and we're not charging more, but we're having a very good year in terms of adding new signings to our pipeline. So we are getting close to a number which is 25. We've officially communicated 22, but in the interim, we have signed 3 more. So year to date, our signings is at 25 hotels in the first 9 months. And we have also opened 12 hotels. And some very good, very significant properties like a palace in Jaipur called the Taj Savai Man Mahal, a business hotel in Jaipur, the Taj Amir, a resort in Kerala, the Taj Wayanad, and a business hotel in Kolkata, our second one, the Taj New Town, and several Ginger and Vivanta branded properties, which we're very proud of. And we expect this trend to continue at opening, 16 to 18 hotels, even in the next financial year or in the next calendar year. So in the calendar year, we would have also opened 18 hotels, which is absolutely in line with our guidance of 1.5 hotels a year. But Lada, if I may take a moment, sure. I think there is one thing which might be of interest to the viewers, that given that the supply is constrained, and the demand is increasing, the sector has had the ability to charge higher, and the sector utilized the 2 years of COVID to review all its fixed costs and the variable costs. So the impact of the ability to charge minus cost to service is actually improving the margins in the sector for the first time. So all the listed companies which have announced Q1 and Q2 results, you will see that they're all reporting higher margins. And despite the impact of inflation, I actually feel inflation will help us increase average rates further. So it's a positive run, albeit very short, only 8-9 months of the year after 2 years of really a big struggle. But it's very positive at the moment.
Oh, okay. Well, let me not end with a numbers question, but a Bombay question. Sea Rock, what's the latest?
Sea Rock, we are working together with the government, with the BMC, with the state in order to push for planning permission. We hope we get that. It will become the next iconic corner Absolutely. Of Mumbai after Jamshedji Tata built the Taj Mahal Palace in Colaba. So if you're looking for the next icon for the city, it has to be the combination of Sea Rock and Land's End.
Okay. Well, we'll look forward for at least nostalgic reasons. But that's a great conversation. So above 30% for sure, right? You're gunning for 33 by in a couple of years.
The margin, yes, for sure. We did 31 in Q1. Q2 is the weakest. We did 25.4. And Q3 is working very strong. So I think all in all, we are in a good space and we are absolutely either in line or ahead of the guidance that we have given under Ahvaan 2025 to the markets, to the shareholders, to the investment community.
Okay, Puneet Chhatwal, always a pleasure having you with us, and particularly on New Year's Eve. Have a great 2023, all of you at Indian Hotels.
Thank you. It's always good to start the year with you and end the year on the last working day with you, Lata. Thank you.
Thanks, Puneet. Well, on that very warm note, we wrap up on Bazaar. Trading ideas lined up for you. Short past.